Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Monday, the 4th of March. It wasn't boring. A lot of back and forth in the market today, no doubt about it. Nice gap into that resistance zone on the S&P 500 on the open. Really sold off pretty nicely and then kind of had a little bit of a late day rally to work to get at least some of that back. But pretty interesting day, although didn't change a lot of the charts, at least from a broad point of view. Definitely saw some movement. And good afternoon to you, Patricia, and welcome everybody. I hope everybody had a fantastic weekend and a great day both in and out of the market here today. Looking ahead to earnings, I mean, we are, as we all know, kind of in that straggler time of earnings where it's not really earnings season, but any given day we're going to have somebody interesting. And going into tomorrow, we do have Target and Kohl's both reporting before the open, so something to be keeping an eye on. Oh, 9 degrees, Daniel. Whew, not that cold here. I'm sorry to hear that. So it tried to snow yesterday morning, and we were getting some big flakes early, but it didn't last. It was gone by noon. It's a little warmer. It's a little warmer than 9. So good, Ryan. I'm glad. I saw that when I found those guys. I was hoping I'd see you either here in the halftime report, get your take. And first thing I thought of course, if you guys know Ryan, he's got a little to do with the golfing world. And so, when I saw Callaway Golf Company, definitely wanted to get his take on it. So I'm glad you caught it, Ryan. Here we are on the S&P. I mean, it was an interesting day. It really has the feeling to me that we've tried to gap, cheat, if you will, above resistance, or at least tried a few times. We did it last week. We did it here today. And it seems like we're not having it. We're going to have to break through resistance, while the market's open. And maybe that will not end up being the way it plays out. But that's how it feels to me right now. We're just not going to be able to cheat through this level of resistance on a gap. And at least for today, we were not able to do that. Well, you're an expert compared to me, Ryan. So I will default to you there. But really, as you can kind of see, I mean, we really started selling. Really, we're picking up quite a bit of steam going into the halfway point of the market day. About the time we were hanging out over in the halftime report, did catch our footing at 2770. We know that's kind of that bottom of that range that they've kind of developed. Again, it's more of an area than a number probably, before really showing some nice resiliency working back through the last part of the trading day. So, I mean, we had a nice gap on the open, a really big intraday sell-off, and a pretty nice intraday rally, which probably started by intraday traders covering shorts, and then probably turned a little bit into some intraday buyers, coming back into the market. So, we really didn't see a tremendous amount of things change today, really. It was definitely more volatile than we have seen as of late. And so that might be something to kind of, think about. It is just one day, but we've not seen, this type of, top to bottom candlestick movement in the market for a bit, especially when the sellers were in control. Again, it's just one day, and I don't want to overdo it by any means, but maybe that is, it's just something to keep in mind. Maybe volatility, is maybe it might want to come back at least a little bit. Again, day one, I'm not going to start freaking out about it by any means, but I am going to note, this is definitely an out of character day, at least in terms of the size of the candlestick versus what we've really been dealing with in the market. We are just continuing to fight, and it has been a fight, that's why we identify resistance, right, and support. We're not terribly surprised that it's a fight. At least I don't believe that we should be. It's just still, we don't have a winner. We can't say that there's really a bunch of sell signals. We even closed above that 9 EMA. So at least in the S&P, even that short-term moving average was still able to hold. Yeah, we stuck our nose well below it for a little while, but ultimately rallied up very nicely off of it. So again, it's just going to have to continue to follow this along. Are we able to break? Do we get a little bit of a deeper pullback? Either way, in my opinion, is fine. I wouldn't mind an overall pullback, but there's a lot of pullback opportunities that have happened in the market and are happening in the market. So, if we want to consolidate and then break resistance, I think that's a perfectly reasonable signal as well. We're not getting it today, whatever you're looking for. We're basically still fighting at resistance wherever you find yourselves in the overall market. Surprise, surprise, exact same situation going on over in the NASDAQ as we continue to bump our head at that 72. It seemed like it wanted too early, but again, it's not how you start, it's how you finish, right? And today was definitely one of those days. No surprise over on the Dow, some selling over there, down a little bit more percentage-wise than our NASDAQ on our S&P. I'm not really making anything of too much about that. I guess we could say that we did close below our 9 EMA here on the Dow, which again is not a bearish signal. It's just not a bullish signal, right? At least that's a good way to think about it, I believe. But again, we're really just continuing to fight at resistance, and we haven't broke support or anything along those lines. So I have a hard time, at least as of the way the charts look today, broadly speaking, looking at things from a bearish point of view. Individually speaking, I have no objection to it whatsoever. But broadly looking at the index, I don't think you can make a strong technical bearish case. And lastly, over on the RUT, more of the same as we continue to go back and forth over here as well. So, I mean, this is just one of those heavyweight fights. Somebody will eventually win. We'll either, get, knocked back into a deeper pullback, which may or may not end up being something bigger than that, or we'll take out resistance. But here today, just like last week, pretty much all week long, we're just still in the middle of the battle. So no clarity here today. As we kind of shift over into the sectors, interesting days. I mean, for the most part, they're going to mimic what the overall market did here today. But interesting from where it happened over in the material sector, we worked right back into that 20, right back into that old resistance level. And that is where we kind of had that turnaround on the intraday as buyers were willing to at least bet on that holding in the short term. We did see some pretty decent movement off of it. Now, if we look at it on an intraday level, I mean, it's not going to look a whole lot different than the overall market, right? Where we had our gap up, our move down, but did kind of bounce back a little bit stronger than some of the other areas in the market. I continue to like this area. I do feel like it's not quite there from a pullback point of view, at least overall, but I'm getting there to think that it might be in the next day or two. Of course, the break of 56 is probably a better signal, whether we're talking a trading signal or just continuation signal. I really think the break of 56 is probably a better signal than today's candle at resistance or support, I suppose. But I do think it gives us a little more reason to believe that buyers are willing to step into this area with a little bit of conviction. Really same type of situation over in energy here today. It seems like energy wants to make a move and is just kind of stuck with the overall market. But unlike so many other areas, and we've talked about this several times, that are kind of challenging resistance, right now we're just continuing to hold support, right, over in the energy sector. At least collectively, there are still things challenging resistance for sure. PXD was one I ran into today. It's kind of got a pretty clear top. I was thinking about maybe adding to the breakout watch list, but really not a whole lot here that we haven't really seen over the last 2 weeks of trading. We just continue to hold that break support. As long as this support holds, I will maintain you can't look at this. And when I say you, I mean me. You can do whatever you want, right? But I can't look at this from a bearish point of view as long as this 65 level of support holds. That is the bare minimum, and below that, I don't know that I would be going bearish so much as not being bullish anymore. Every day above that support level just makes me, like I probably said before, believe that statement even more. So not a lot going on over here, but again, we did come well off of the lows as we kind of tested that intraday bottom. As long as this, I think this is really the key right here, the 65 holding, and as long as that is true, I will continue at least to look at it from a bullish point of view. Our financials seem like they wanted to get going early with the market. When the market gapped on the open, you saw a nice little move in the financial sector. Goldman Sachs was kind of knocking right on the door of 200. Bank of America was challenging resistance, but it wasn't happening. And once again, we've worked, above that 200 early, in the day, only to close below it at the end of the day. We're having a heck of a hard time breaking and closing above that average. Now, again, today a lot of selling, especially when financial ETF was selling off. So I think maybe we can attribute some of that to that. But whether or not that's true, we'll never know for sure, right? So we can, probably say that this 200 is a little bit of a short-term resistance, a little bit of a barrier for the stocks within this sector. At least that's how I look at it. Beyond that, and I still overall like this. We haven't taken out trend or anything like that. But again, we are continuing that, it's one of those things. Sooner or later, someone's just going to throw in the towel, right? Either the buyers who keep coming in off of these intraday lows or the sellers who, keep betting on resistance holding, across the board. So one of these days, we're going to get some clarity. Here today, a lot of price action, a lot of movement back and forth. And it did seem like it wanted to get running. It's not the way the day ended, though. Same situation as the overall market here in the industrial sector as we continue just to battle at that 77 after a very nice run. Of course, we all know how nice that run was. We know that there's a lot of history at 77, as we've looked at many times. We are just either going to need a pullback, and we're seeing it. You saw, Boeing doing a little bit of a pullback. Of course, they're a big player. They're not the only company pulling back in the industrial sector, of course. But this 77 is just kind of a really tough area, especially lining up with the market at resistance. So pullbacks, very open to. Breakout, very open to. Right now, I think at least overall, it's not the type of, really market where tomorrow I can see myself running off and doing a whole bunch one way or the other. I still am very interested in this sector personally, but 77, either we have to have a deep enough pullback for me to feel there's enough room to go from point A to back to 77, so down into, 75, at least in theory, pull back, I might be able to work, back up to that 77 resistance. For any belief that we're moving any further, for me, it's going to have to take out 77. And that has turned out to be a pretty tough fight. And while that makes sense, we also, we were screaming up the charts in the industrial sector. We watched it together all year long. Then all of a sudden, boom, we are just having one heck of a time getting through that. Again, so many of these areas are going to need some help from a broad market perspective, I think, to break out. Of course, technology going to look very, very similar to the NASDAQ, working right into that old resistance level. A lot of movement, nice bounce off of the intraday lows, but really sold off on the open. Second half, pretty nice, creating a nice little tail here. It seems like it, again, it still seems to me that the market wants to break. Now, I'm not going to do anything about it until it does break, right? We're all entitled to our opinions, but the charts don't lie. Until it breaks resistance, it hasn't broke resistance, no matter how much I think it should, right? So a good lesson to always remember. But tech, working just like the NASDAQ, we just continue. We can't break resistance. We're not even getting kind of that first sector to break out. Right, if we could kind of get that first sector to break out, maybe it would help the market, get a second sector to break out. But that is not what we're seeing right now. It is a battle to end all battles, at least for 2019 so far. Over in staples, we just continue to go back and forth. I am continuing to shy away collectively from this area. Individual component, I have no objection to either from a bullish or a bearish standpoint. Until we're above, this resistance, I'm very open to that. But collectively, I do not like this area. I've not been shy about it as of late. So not a whole lot has changed. We are continuing to fight at that resistance, but we're starting to see, every day, maybe just a little bit lower low. All right. These last few trading days, every day closing below a 9. Now we're, closing right at or below that 20. Haven't broke support, haven't really done anything wrong, but it really feels like it's trying to turn over. And to prove to me that that's not true, all it has to do, just this one little thing, break resistance. So break that resistance level, and then I will be comfortable with you as a whole consumer staples sector. Until that has happened, though, I'm going to sound like a broken record until we actually see some sell signals, at which point in time I'll be open. I'll certainly be looking at those as well. Over in utilities, just another day, closing above 57. Not a strong candle, but we are very extended. Overall, this sector does continue to look very strong. We know, and those of you who are joining us, welcome. If this is your first time with us, great to have you here with us. If this is the first time you're here, we're just at a major level of resistance at $57 or approximately $57 on the utility ETF right now. So we're keeping an eye on that 57. But another day just kind of inching a little bit above it. working down into that 9 on the intraday, because things, as we know, when things get selling, it's easy for everything to get caught up in that, right? And the utility ETF was certainly no different, nor were utility stocks. But working back into that rising 9, boom, they really shot up off of that, very, very nicely. So I still don't feel like this is, something that's strong enough to call a break, and again, that's just me. You may not agree with that. I think from a purely textbook definition, we are above resistance. And so if you were to call it a break, I wouldn't really fight against you. I'm not quite there yet, but I am very open. Of course, utilities are more of a trader or investors or position traders vehicle as opposed to a trader's vehicle as a general rule, but that's not always true. We watched the break of 55. That was a pretty nice move to 57 in a couple of weeks, right? So I don't think swing traders should not ever think about trading utilities. I just think that, we should probably assume that maybe they're traditionally maybe more, favored by position traders, but I think we just want good opportunities. At least that's my take. Another weird day over in the healthcare sector. Technically speaking, very, very importantly, I believe we worked back to that old resistance level, and that is where we caught our low. So at least from a technical point of view, we have held support, at least today, within the healthcare ETF. Now, as we talked about last week, we're seeing really big signs of weakness over in the healthcare plans, and they really, it wasn't a great day for individual, stocks all across the board in the healthcare sector today by any means, but we really are being drugged down maybe a little more than at least I think we should be because of those healthcare plans. They're just showing a lot of weakness. So much like last week, I'm still very open to healthcare stocks from a bullish point of view, just not from the healthcare plans point of view. Those charts are looking awfully bearish to me, and certainly at the very least, not bullish to me. And it's going to take them a little while to change my mind on that. So I'm going to continue to kind of separate the components of this ETF myself until we kind of get a little bit of clarity there. A break below this support level, I think you'd have to call a sell signal. I don't think today's candle, as ugly as it was, I still don't think there are sell signals generated here on this ETF. And what's up, Sixth? Always good to see you. Great to have you here. I don't think we can call this a bearish signal, but a close below this support level, that'd be a breaking of the breakout point, closing below short-term moving averages. I think you could call it a short-term signal. A little more conservatively, probably be looking at this swing low back here at $89 from a sell signal point of view. As long as this holds, I'm all right with it. But again, for me, I'm just pretending, at least right now, that the healthcare plans are kind of off the table from a bullish point of view. And that is how I'm going to continue to look at this sector as a whole. Just tremendous weakness over there. And whether it's justified or not, I guess it really doesn't matter. That's what's happening, right? You see big moves in CVS, CI, UNH, just across the board. Again, another rough day. Over discretionary, we are still sideways. It did work down to kind of that swing low that we put in last week on its intraday, was, worked right into very close to that 112 that we've been looking at as a breakout point on the open. That wasn't happening today. It wasn't going to outdo the market. So we are still kind of developing that little sideways range. I still really do like a break of 112 personally as a nice tradable signal to the upside. That is what I'm going to continue to watch for. Not really getting a lot of pullback, opportunities, at least, collectively, individually. You guys know the drill. There's always somebody out there doing something, right? But as we kind of look at the sector as a whole, it's kind of been, in this choppy, situation, just like we've seen with the overall market as of late. A break of 112, I will like that. I've been, we've kind of talked about that for a while now, right? Even when we were working to 112, I really do think there's room for the stocks in this sector to continue to work to the upside. We have Target, we have Kohl's earnings. So again, we still have some retail earnings that can and potentially will impact what this thing does in the and over the course of the week. Target certainly is, a name in that area, as is Kohl's. We'll have to see how that impacts it. But 112 continues to be a hold. Short-term support, I think you can call it 110, but really our swing support really is way down here at 106.50. So for me, even if we break that 110, that really wouldn't matter all that much to me. I would just be kind of looking at it as more of a pullback opportunity across the board as opposed to a bearish signal. But I would understand, at least I would understand the argument. If we did break 110, we're below our all of our averages. We did take out a little bit of support. And I could understand the argument. I just don't think it would be a very good argument personally. Over in real estate, we continue to move and not go anywhere. As again, this would just had such a nice run, and it's still holding on to that strength. Whether or not it will win in the end, I don't know. But we're still seeing remnants of what we were seeing in January and February. Any reason is a good reason to buy the real estate sector. We're continuing to see it. You see these big tails almost every single day nowadays in the real estate sector, showing me that no matter how bad bears want to sell it, the bulls are just not letting them do that right now. Maybe that will translate. And some of these charts, the individual components aren't looking as strong as they were even 2 weeks ago. I think this is more of a monitor area for me right now than a tradable area. But I get it. I mean, I get people buying in off of basically any chance that they get. It was tremendously strong, and it really hasn't done much to change, overall, other than be extended to the upside and going with a little bit of, sideways with a side of volatility, especially for REITs that aren't traditionally known as being super volatile, trading instruments. So we're seeing a little more movement, on the day-to-day than at least I'm accustomed to looking at REITs. So I'm going to continue to be cautious, still looking at overall bullish. I still have a hard time making a bearish case for it. If we can establish some support, that can easily change. But we, have not really done anything wrong. Again, it's one of those areas, not done much right, but I don't think it's done a whole lot wrong. Certainly not enough to call it bearish to me. And lastly, over in communication services, we actually saw a little movement here. You saw Facebook trying to break, and I believe it did end up closing above its 200-day moving average here today. Google's been kind of moving a little bit more. So maybe it wants to get in on some of the action. It's been very sideways, even by, the last week of trading's been very sideways. Still seeing that same, maybe on a higher level over here. It's hard to move without, a Facebook and or a Google, when they're such major components of the ETF. For me, nothing really has changed. Collectively, above 47 stays a buy, below 45 stays a sell, and anything in between is just stuff in between. Individual components, I'm perfectly okay with, although I'm not a huge fan of Facebook myself, at least the way its chart looks right now. But that can change. And certainly one day it will, whether it's bullish or bearish. Same with Google. I don't really like the charts. Video game charts are kind of all over the map right now. Netflix just cannot break above 360 no matter how hard it tries. I still like other areas, almost every area, more than the communication services, to be quite honest with you. But that, likely could change with a break one way or the other. I'd probably be getting a little bit of clarity technically on some of those components. And so I do think that that's going to be an interesting signal. And I do think eventually we're going to get it one way or the other, above 47 or 45. I can't imagine these type of companies stay sideways forever. But right now, that's where they find themselves, not a clear direction one way or the other. So, I mean, really, we got a lot of movement, definitely a little more volatility than we're accustomed to. That may very well not mean anything. I'm certainly not worried about it, but I am going to note it. This is the first day that we saw what I believe was noticeably more volatility on the intraday than, at least across the board, than we have seen in quite some time. Not really a concern of mine at this point in time, but it's noted. It's noted that there was definitely, definitely a little more intraday action. Our resistance levels pretty much across the board continue to hold at the same numbers. What's really interesting, if you think about how this might play out from a bullish breakout point of view, if we break out in the broad market, we're probably going to take some of these sectors with us, right? Whether it's industrials, financials, materials, technology. I mean, a lot of these things are very close to challenging or right knocking on the door of their own resistance levels. So if we do break out in the market, we're going to be seeing a lot of breakouts kind of happening in that same general time frame. So that might be a really interesting bullish signal if we are able to get it. Not today, but we will see where it takes us here tomorrow. No doubt about that. Of course, over on the VIX here today, had some selling early, a little more than the market's been accustomed to. So we did see a little bit of a spike on that volatility index. Really not a whole lot to see here, but you saw a little spike. You did see it work, higher than it's been for a little bit now, as it was down over 1%. And that's really the first time the markets, had to really think about that for a while. So not a lot to see there, I don't think. Over in the dollar, continuing that movement from Friday, definitely working and trying at least to work its way back into that 97 resistance zone, well off of our highs on the intraday here today. No doubt about that. I don't think really any sell signals. I continue to be neutral on this. I will continue to be neutral on this probably until it's broke out of 97.50 or 95. Right now, I do think you can say there are more bullish signals than bearish signals within that trading range. If you are looking at directionally trading the dollar right now, as the guy said on the halftime report, to be a news-driven week in the currency market. So keep your eyes out for that. But really, again, you guys know me, at least most of you do, and it's very range bound, and any given time is going to be doing something in between. I'm waiting for a clean signal that we're out of this sideways range that we've now been in here for several months. So not a lot has changed for me, at least over in the dollar. Things have definitely changed for gold, and silver and the metals showing, even more weakness here today. Of course, we took out that 1300 like it wasn't even there on Friday, took out that 50-period moving average, and just continued that, early, when the futures market opened yesterday afternoon, did see it try to establish a little bit of a floor, was not going to have it, and quite a bit of selling here today. Right now, I still think that from a bullish point of view, you're kind of stepping back. I don't know that I would feel comfortable with the way the chart looks today on gold being bearish. Personally, I am not comfortable being that way. That can change, but not on this particular swing. It's going to need to establish support and make another move to the upside before I'd be comfortable saying that. I think an easy way to look at it for me right now is I can't be bullish until it's above 13 or until something new develops, whichever happens first. And something new may very well develop before we break back above 13. As far as support goes, really our next level of support probably down here, in my opinion, at least at 1275 or so. That was an old bounce point that we've seen in the not too terribly distant, terrible distant past. So, I do think we got a little bit of support that might entice some buyers, not too far away from us. But still, definitely more signals to the downside, at least short term, than and I really think you can make a strong case that there's buy signals right now, even on much of a short term time frame. So for me, I don't think you necessarily have to be or should be bearish on gold right now. But I do think you kind of have to, like we talked on Friday, have to take a little bit of a bullish step back. That's definitely a sell signal in my mind, and I don't really think that's up for debate. I think the debate is, what do you do about it? So, keep an eye on 1275, keep an eye on 13. Those are the two numbers that I'm going to be keeping an eye on in the, until we, work into one of them, potentially this week. And maybe we just need to go sideways and get working back. That can happen too. Silver breaking support. So, they broke support on Friday, much like gold broke through 13, really worked back down, closing right at that support level here on Friday, continuing that downward movement here today. This chart looks a lot more bearish to me than gold personally. We've taken out multiple levels of support. We've potentially double topped. We're now below every moving average. The 9 is not only falling, the 20 is not only falling, but now the 9 is falling below the falling 20. So I think there's a lot of bearish signals to the downside. Personally, in silver, I think it makes a much more interesting bearish argument than gold does. Although good chance that they were going to work somewhat together, as we know, one way or the other. Next support really not down until about $15 here. Now this was kind of a big deal, right? And it's a nice round number to boot. This was a top. We had a hard time breaking through 15, and when we finally did break through 15, we really ran. So 15 is definitely a number I think that we need to be keeping an eye out for. If I'm bearish in silver, I'm looking to take profits at that point. If I'm bearish and not in a trade right now, I'm probably feeling like I'm a little too close, at least on a daily time frame. I do think 15 is worth keeping an eye on. For me, that's not a buy point, but I think it's got enough history that you can argue that just because I think that other people will be interested in buying at 15. I've already heard, a couple people say buy at 15. So whether or not they should, they're thinking about it. But a nice break to the downside here today as the metal's definitely turning over. It might take a little while to get some new signals over there. Over natural gas, it's a good time. I'm a big fan of how natural gas is performing. We didn't gap through our little range. Of course, we established a little bit of support a couple weeks ago, broke out on last week's open, came back and tested that old resistance as support, and are knocking on the door of the old support, which we've already confirmed at least as some short-term resistance. Lining up, getting awfully close to breaking above that 50-day moving average. And we've talked about this, whether or not I think, I'm going to or I should do anything. I think a break above this resistance is a tradable signal personally. And I think that's probably going to depend on the individual. But just kind of thinking how this would look, if we break out hypothetically and close tomorrow. Well, we've established higher lows and higher highs where, we've got our moving averages flipped around. We've held support. We're going to be knocking right on the door of the 50, which doesn't have a huge long history, I don't think, of being a major level of resistance in natural gas, but it's definitely something that we can kind of keep an eye on. I think it's a bullish signal if we break, and I'm not going to put up a fight against anybody who says they think it's a tradable bullish signal. I think most people would recognize it as a bullish signal if we do break. I know not everybody would trade it as such, and that's okay. I get it. This is still early, in the potential reversal process if we do break that resistance. Support down here, I think you could make at least somewhat of a similar bearish argument. If we fail this breakout point, we take out that low point. The argument against that, I would say, is, we've got support very close, so I'd want to be keeping an eye on that. And then we have that 250 support zone, which is a big number for natural gas. And so, going bearish, a little higher, okay, fair enough. Close to 250, it's, I think if you are bearish and you approach 250, that's a place where I would unquestionably take profits, right or wrong. 250's got a long history of support here on natural gas. So we'll see where this one goes. I wouldn't mind it spending another day or two in this trading range, giving us more time to decide what, if anything, we might want to do if it does decide to break to the upside. And lastly, over in crude, a little bit of a bounce back day off of the selling on Friday. Not a lot here has changed from a technical point of view here. We continue to basically be sideways. And as long as we hold our swing low from last week, they're approximately $55. I don't really understand a bearish argument. I could understand the bearish argument if we break and close below 55. I don't know that I would be bearish at that point, but I know I wouldn't be bullish anymore. A break of 55 would take me off the bullish table personally, whereas a break above this 58 would be a buy signal. The question you probably would have to ask yourself is, what do you think about this old resistance, this old support, which is, of course, the line that we have sitting right above us at $59. And that's going to be kind of up to you. The longer we're sideways in this range, the less I'm worried about this if we do break above it. I will definitely keep an eye on it. But it's, if we do end up going sideways for a little longer and break through, I'm going to note it, but it may not stop me from potentially being a bull. Whereas 2 weeks ago it would have. The longer we're in this range, the more I'll be at least open to that. Because beyond that, we have some room to run into the 62 range. So it's really, what do you think about that 59 level of resistance if, in fact, we ever challenge or break through it? So right now, I think our numbers are approximately 55 and 58. Anything in between, we are range bound, in my opinion. And your own personal rules would dictate whether or not you would or wouldn't trade a break of either direction. Of course, you could also be thinking about, playing in the range, but that's easier said than done if you're not kind of a day trader. So, it was definitely an interesting day, guys, in the market. Definitely a lot more movement than we've seen on the broad market. Last week, we hung out at resistance. We're pretty small candles. We didn't have a small candle here today. We're still hanging out at resistance. The end result is about the same, right, as it was on Friday. Still knocking on the door of resistance and very undecided. But really right now, it still continues to be the big story from a technical point of view. Just resistance is sitting on top of us, and who wants to be the first to buy? It's one of those things. Nobody here wants to be the first to buy at resistance. We all want it to break resistance, and then we'll think about it, right? And we're not alone. That's probably a mentality the market's having. So until we get some clarity. I think we can continue to look at things individually. I think we can continue to look, at bullish and bearish opportunities on individual stocks or commodities or ETFs or what have you. But collectively, I think until we get a break of resistance, we are kind of just waiting for it to play itself out, whether we're going to break or ultimately get pushed down. I don't think we know just yet. I do find it very interesting if we do take resistance, because I kind of think about the domino effect that may occur. The S&P breaks resistance, maybe the NASDAQ follows suit. The Dow's not too far behind it. The RUT's not too far behind it. So while any one of these indexes could kind of be hypothetically the first one to break, that momentum might have the domino effect on the other ones, right? And same with some of our ETFs. If we can come out of this little sideways range in energy, there's really not a lot of resistance, in my opinion, until $69, right? And so all of a sudden, I could see some movement there. The material sector, even right now, it's got some room into 57, a lot of room past that resistance. Industrials kind of speaks for itself. Tech. So I kind of think about the hypothetical domino situation that could occur if we break out. I think it actually could be an interesting bullish signal if we get it because of that. We'll have to see if we get it. All I know is today we didn't. But ladies and gentlemen, that is going to do the market recap for the day. But as always, it is great to see each and every one of you guys. Thank you so much for joining me here. It's always more fun to do this with friends than on your own. So thanks a lot for hanging out with us here in the market recap. If you are new around here, welcome. Glad to have you. Be sure to hit that subscribe button and that notification bell if you haven't already. We're always happy to have you over here with us at Tackle Trading. And don't be afraid to follow us over at Tackle Trading on Twitter as well. Great way where we can kind of share some of the things that we're running into throughout the trading day with our team members. So if you enjoyed the market recap, guys, it's always helpful and appreciated if you do give it a thumbs up and or a share to let us know we're on the right track, and it is helpful for you. Just YouTube things, right? And hey, one of these days I'm going to beat Matt and Tim in likes. Probably not today, but one of these days I'm going to get them. But thanks a lot, guys. It's great to see you guys. Great to have you here. I will let you get out of here, but we'll do it same time and channel here tomorrow afternoon. It's Monday, so go enjoy whatever you do on a Monday night, and we'll be ready to rock and roll here at Tackle Trading once again here tomorrow. So thank you all so much. You guys have a great afternoon, great evening, and I'll see you same time and channel tomorrow. Thanks, everybody.